Giving away some of your assets during your life can be a great way to minimize inheritance tax. But what about giving away your house? Your home is often the most valuable possession you own, so it's understandable that you may want to give it away to your children or grandchildren whilst you're still alive. And if you live 7 years after making the gift, you can give most assets away, including your home. And there will be no inheritance tax due on them as they will fall outside of your estate. But you've got to watch out. If you want to continue living in your house once you've gifted it to someone else, it's not so straightforward. You cannot give someone something if you will still benefit from the gift in your lifetime. Gifting your house to your child but continuing to live in the property rent-free until you die is one of the most common examples of the questions I get asked. Is that okay? Well, no, it isn't. When this is the case, the property will still form part of your estate after your death, so inheritance tax is still going to be due. Giving something away that you still benefit from is called a gift with reservation of benefit. Common examples of gifts with reservation include giving your home to a relative but still living there, giving away a caravan but still using it for free for your holiday, or giving away a valuable painting but still displaying it in your house. So in this scenario, when you die, the value of your home at the time of your death, if it's higher than it was at the date of the gift with a reservation of benefits, i.e. higher than when you gave it to your kids, it will be included within the inheritance tax calculations. And what's more, there are tax implications for your children. For capital gains tax purposes, your home belongs to your kids from the date of the gift. So when they come to sell it, they'll also be liable to pay capital gains tax on the increase in the value from the date of the gift to the date of the sale at a rate of as high as 28%, depending on a number of factors. So how do you get around this problem? Well, one solution is to pay a full market rent to your children as the new owners of the property. This in itself may not be enough, as proper tenancy agreements need to be in place with regular rent reviews and increases. It's also so important to remember that your children will also pay income tax on the rent paid to them. So another alternative would be for you to sell your home and give the cash to your children, which they then use to buy a new property for you to live in rent-free. As they have never owned the new house, this is not a gift with a reservation of benefits, but instead a charge to income tax can arise, which is known as the pre-owned assets tax. In a nutshell, if this is something that you're considering, I'd really suggest you get professional advice. Thanks for checking out my YouTube channel. I'm Justin King. I'm a chartered and certified financial planner, and my aim is to help people live successful lives. And in my experience, that often involves understanding your money. I hope you've enjoyed this video. If you have, press the like button to help more people like you find my channel, and check out the description below for other videos in my inheritance tax planning series.